What's up, YouTube? We're going to go over Airbnb in this video. Ticker symbol ABNB. Year to date, company is up 41.8%. Course of 1 year, it is up only 3.8%. One thing to realize is that this company's currently got 8.6% short interest on it. Pretty high for a company that's actually doing pretty well, falling off the edge of a cliff, but there is quite a bit of short interest on this company currently. They do report their earnings next week on November 1st, and we've also seen that analyst revisions have been in the up direction. So we got 20 analysts raise their EPS revisions and 2 have gone lower. So once they do report their earnings, I think there's going to be 2 key things to keep an eye out for. And that's going to be how many total active listings there are, and I think that's going to be a potential sign of whether or not Airbnb is truly in a bubble. If total active listings plummet, then that could be a bit of a red flag for this company, and that might send this stock significantly lower. So that'll be a pretty big key component to keep an eye out for, is to see where their total active listings ends up. Another thing that might be important is to keep an eye on their average daily rates as well. See if they're going to stabilize around 165 roughly per day there. Maybe it drops down just a little bit because of inflation. Who knows? So I think that's another one to keep an eye on. But I think this one right here is the total active listings is going to be very important next week when they report. Another thing that has been going on at this company has been quite a bit of insider selling. So we can come up here, we can see total number of sells in the last 3 months has been 41 of the 45 trades made within the insider trading. So we can see here's your insider, your relation, the shares traded, and the price here. So they've just been selling on the way down. But as you can see, here's their shares held, and they've only been just trimming their positions. They really haven't been completely eliminating their positions. So that kind of tells you, um, I don't know if that's something worth being too concerned about based on how many insiders have been selling some of their positions here. So to me, that doesn't strike too much of an alarm. So over on the financials on Airbnb here. So this company IPO'd in 2020. So 2020 and beyond is publicly traded numbers, but everything we do have some other numbers prior to them IPOing. Revenue, gross profit, net income, all three are trending higher. Gross profit currently sitting, or sorry, gross margin currently sitting at 82%. Net margin at 25%, so decent margins there. Revenue and gross profit year over year is looking like we are slowing down a little bit. Return on invested capital sitting at 27%, very good. PE ratio currently at 35, might be a little richly valued. Cash to debt and cash to short-term debt. So we can see we have more short-term debt than cash, and we also have more total liabilities than cash. And we will take a look at those and dissect those a little bit on their most recent earnings report. Net income to free cash flow. We have more free cash flow than net income, and that will be another thing we will take a look at on their earnings. Free cash flow, you can see trending nicely and just exponential growth on their free cash flow. Very good to see. Share count dilution, they are still diluting shareholders. Hopefully they can knock that off. They do have a share buyback program going on right now, so maybe they are potentially buying back some shares right now, at least enough to offset their stock-based compensation amount. So looks like they're buying back more than what their stock-based compensation is. Maybe that'll start to trend down lower here. Capital expenditures, pretty good, pretty nominal. They got $29 million in capital expenditures on a company that's doing free cash flow of $3.9 billion, and a company that does $9 billion in annualized revenue. So pretty nominal on the capital expenditures there. Financials overall looking pretty solid at this company. Now let's take a look at the earnings report. On the assets on the balance sheet here, we have our cash and our short-term investments, and everything on the right-hand side here is the most recent numbers. So we can add in our 7.9 plus 2.4, which gives us $10.3 billion in cash. Then we scroll down here a little bit more, we have our liabilities. So what we get to do is here is funds payable. We get to cross off because we have funds receivable up here, same dollar amount, get to cross those off. So then we get to cross those off. Then what we get to do is take 9.14, subtract that off of 13.6, which gives us $4.5 billion in short-term debt. And we have $10.3 billion in cash. So we got more than enough cash to cover our short-term debt. Plus, we're doing a free cash flow of almost $4.5 billion. So our free cash flow alone could cover our short-term debt. But then you come down here, we got $16 billion in total liabilities. Subtract out $9.1 billion. That leaves you with about $7 billion in total liabilities. So you've got more than enough cash to cover your total liabilities. So Nothing to be concerned about there. That actually is very, very good. Down at the cash flow statement, same thing, right-hand side, we have our most recent cash flows. This is in 6 months. So what we want to know is why is our net or our CFO or our cash flows higher than our net income? So what we do is we add back in, well, we don't add back in, but we add in stock-based compensation, which is 544 million. Then we also get to add in unearned fees. So you add all three of those together, and now is going to give us $2.496 billion in CFO. So then you take that, you subtract out $15 million of capex, and that gives you $2.84 billion of free cash flow, or $4.9 billion annualized. So the only, I guess, red flag you would say would be the stock-based compensation, but I mean it it we don't like to see it, but it is what it is, and it's very normal for within many companies across the entire stock market. So that's what you get. And so that's why our stock base or our net incomes are significantly higher than, or that's why our cash flows are significantly higher than our net income. So again, nothing too alarming there. So over the comps, we have two other companies to compare to, BKNG and EXPE. And on Airbnb, we've got just the one red flag, and that is just going to be your operating cash flow is higher than your net income. So we can see market cap, BKNG has more market share than Airbnb currently, and revs, gross profit, BKNG has a lot more revenue and gross profit than Airbnb. Same thing with Expedia. They've also got more revenue and gross profit. Growth rates over here, looking like Airbnb is going to have some pretty decent growth rates going forward. Same thing with BKNG, EXPD, also good growth. Gross margin here, we have 82% of Airbnb. BKNG somehow can pull off 100% gross margin, and then EXPD at 86. So good margins there. Operating margin here, pretty decent. EXPD or BKNG 31%, and profit margin. Airbnb has the best profit margin on the board, and BKNG not too far behind. Free cash flow. BKNG more free cash flow, but Airbnb also pretty good for cash flow. Return on invested capital, same thing, both looking pretty good there. PE though, is where things change. We got a high PE on Airbnb, but a low PE or lower PE on BKNG. So based on this chart right here, I think BKNG is probably one to worth looking into. But Airbnb is still looking pretty good. BKNG though looking just as good, if not maybe slightly better. Over at the calculations here, we have Airbnb under Peterlynch valuation of $82.33 per share. Multiples comparison, $74.05. Manual PE, we take our market cap minus cash plus debt divided by cash from operations. We get 21 years to equal our current market cap. So that's telling us we are just barely fairly valued, almost undervalued there. So pretty good. Price to book, 5-year average, 19.3, currently 15.1. Peg ratio telling us we are overvalued currently, and forward looking, basically fairly valued. Graham's valuation gives them $96.86 per share. DCF valuation, analysts have a growth rate on this one for 23%. I gave them 15%, which gives them a DCF price per share of $171.36. Rule 72, we only got two sources for EPS growth rate, which is an average of 21.94. That goes into 72, 3.2 times. That goes into 10 years, 3 times. And then we could double our EPS 3 times. So that gives us just about 29. So I gave them a 29 for a future EPS, which is a fair value of $318.06 per share. On our summary here, Airbnb is currently trading at $120.39. We get a fair market value on this company of $148.53. 30% margin of safety, $103.97, and analysts have a price target of $142.50. So we're right in line with where analysts are currently. We have valued this company before, and when we did value it, we got $152 per share, so slightly less than where we were before. And we can see here's all of our metrics. There was really no real big changes across the board. Multiples was the biggest change. Everything else was pretty much in line with where it was a few months ago. So now over to the technicals. So this is on a weekly chart here, and we are locked in a downtrend right now. And at least in the long term, in the shorter term, we are in a macro uptrend back and retesting this downtrend still. So based on financials here, I don't know that this thing will break through this downtrend anytime soon. We do have earnings in a week. We'll have to see how good or bad the earnings are, or maybe they're just mediocre. I think if we have really good earnings, there's a chance we break this channel finally and get above $145 per share, and maybe start trending within this new channel that we have made recently. So we'll have to wait and see next week on November 1st to see what happens. But If we look in the macro trend, we are making a higher high, set of higher highs and higher lows in a channel here, and maybe we break out eventually here after earnings and see if this thing can't move higher. But if earnings are bad and we break this trend, this lower trend line, I think all bets are off with this channel here, and we're coming back to about $102 per share. And then if we get $102 per share, then maybe what we do is we kind of bounce around. Maybe we trend lower. Just depends on what earnings are. But I think, at least in the shorter term here, I think next week is going to determine whether or not we retest 102 or if we retest $145 per share. So in the meantime, that's what I think is all eyes on board for earnings, and see how many active users there are with Airbnb. And I think that'll determine which direction this company is going to be heading. But that is it for Airbnb. If you found value in this video, drop a like, subscribe, and comment. We'll be back later with another stock analysis video.